WPG Property Podcast. We've got a lovely guest with us today, Mr. Jack Fouracre.
Thanks for having me, man.
Yeah, no, thanks for being here. This is awesome. So it's not another episode. It's actually our first episode. So I'll just correct myself there.
Still finalizing the name as well.
That's right. But look, the main purpose really is to just get valuable content out there for people that are looking to purchase property and anyone that's struggling really. I've got my co-host with me, Mr. Daniel Peachy. So I'll let him introduce himself and we'll take it from there.
Hey guys, Dan the man here. So we're going through our podcast today and we've got Jack from Organic Home Loans, our special guest on today. And he's representing the team at Organic and going to go through some questions that we've got for him for some finance related topics.
Yeah, awesome. All right. So Dan, did you want to kick us off?
So Jack, do you want to tell us a bit about yourself and where you're from?
I'm from Campbelltown, but I work out of Ryde. So I started mortgage broking about 5 years ago. I was 22 at the time, so it was pretty hard getting clients. Not a lot of 22-year-olds buying property. But I went full-time, started my own company about a year ago. So not really, Organic's not mine, but operate as a company contracting to Organic. Met Onus, when did we meet, man? About 6 months ago?
Yeah, something like that, man.
Yeah.
I guess we kind of caught on like a house on fire, really.
Yeah. We're both from the area, mate. You're from Liverpool, I'm from Campbelltown.
That's right.
It's close enough.
That's right.
Every hood's the same.
That's right. That's right. And
Red hot.
That's
like
it.
Nice.
I guess
it was in a buyer's agency group that I put out a post just asking for buyer's agents, and he wasted no time, just called me straight up, just called me through Facebook and had a chat, and then yeah, the rest is history. I think we're going to do a lot of business together this year.
100%. And I'm looking forward to it. We've already established a pretty good relationship so far. So we are growing, we are expanding. So yeah, it's great to have you here again.
Yeah, it's good for me, man, because I want to align myself with buyer's agents that are up and coming, because a lot of the more established ones, they've got other brokers, most of their clients would already have brokers as well. So for you guys, you're getting a lot of new business, a lot of new clients. So smart for me. But it's a win-win.
All right, Jacko. So age-old question, bank versus mortgage broker.
Yeah, it's a no-brainer for anyone in the investing space. Most people would use a broker, especially these days. Hasn't always been the case though. I think it was about 10 years ago, 40% of all mortgages were done in branch at your CBA or NAB or something like that. Today it's about 60% of all mortgages are by brokers, and that number's just getting more and more because the value that a broker provides is just superior to a lender. You walk into a lender and they've got one policy, they got one set of products, and you go to a broker, they've got the exact same option, but probably 30 others. So it's really a no-brainer. Once someone goes to a broker, it's very rare that they'll go back to a bank. And a really common customer that I get is someone who walks out of a bank unhappy and just lands into my arms, and it's all good from there.
Yeah, there you go.
Yeah, so, no offense, man. I know you used to work at a branch.
Yeah, I was a broker longer than I worked at a branch. So I do more.
Oh, mate, we should swap seats. Swap shirts as well.
Nah, this one will be too big for you.
All right, and Jack, so how much does it cost to use a broker? Are there any fees involved?
Some brokers will charge upfront, but generally most brokers will just get paid a commission from a bank. So it's really it's free in most cases. Vast majority of cases, it's free. Like a broker's just going to get paid a commission. Generally, the commissions that they get paid from a broker is pretty much the same. So yeah, I don't really pay attention to who pays what. It's purely just whatever the best deal is for the customer at the time.
Yeah. All right. And talking about deals, what kind of deals are accessible to customers right now? And I know this is a very broad question, but what would you say is the minimum entry level kind of qualification for someone to come to you, say, look, Jack, I have an interest in purchasing property? What kind of steps would that customer need to take?
It's very easy if you already own property, because you have access to equity and you'd be able to leverage and, you know, get cash out to purchase more. A lot of the incentives that are out there, mostly for first home buyers. First home buyers get all the good stuff, man. At the moment, the first home loan deposit scheme, that's a good one. You can put down a 5% deposit. That's it. No stamp duty, no LMI. Obviously, you've got to qualify for it, but yeah, doing a lot of first home buyers, and there's always going to be benefits for first home buyers. So that and having property already is put you in a good spot. So a lot of first home buyers just want to get their foot in, and you know, by then it's, once you're exposed to the market, you just hold it over time, and then they come back and they've got some equity and ready to go again. So yeah.
So Jack, with that first home loan deposit scheme, say one of your mates in Campbelltown was looking at a unit there for about 500,000, what sort of deposit would they need to get into the game?
25,000.
That's
I hope that's right. No, it's right.
That's it. 25K.
5%, and you'd probably be in for 1,500 on the conveyancer fees, but yeah, there's no lender's mortgage insurance, no stamp duty below 650.
Wow.
So yeah, it's really cheap, man. Really cheap. So sometimes, like, there's a few banks that do it. They'll have brand new properties and established properties, and you know, a lot of spots have exhausted for both, but there's still some opportunities there. But next financial year they might release some more spots, and yeah. But a lot of times some people come to me and they don't need the scheme. They've got like 70K or 100K, and they're like, oh, I want to do all the first home buyer benefits, and I'm like, it shouldn't really dictate your decision. Like if you've got the money to invest in a better, like like you said, $500,000 get you a unit in Campbelltown, but $500,000 go a long way in Queensland, like or Adelaide, like far out. So it shouldn't really dictate your decision making. And yeah, if you need it to get your foot in the market, great. But if you've got the cash or got an inheritance, like, you don't really have to buy in your backyard.
Yeah, that's awesome. And in relation to before what you were talking about, equity, it's probably a word that's thrown around a lot. A lot of people don't know how they use their equity. So what would you suggest how they'd find out how much equity they have?
Yeah, well, if you bought a property anywhere 2 years ago, you probably got equity. And when you have that equity, it does open up a lot of options for you. And there's a lot of lenders out there that they've got the policy to suit people that have equity and want to access that to invest. I forgot your question. I went on a tangent. So can you just put me around the right track, mate?
Yeah. Well, then you'll bring him back.
Yeah. So in relation, so the equity words used, a lot of people throw it around, but a lot of people don't know what it means. So what is equity, and how do they get to it? And how do they use it?
Generally, if you want to access equity and in a good way, you can access equity up to 90% of the value of the property, but you'd have to pay lender's mortgage insurance. You can access equity up to 80% of the value of the property and pay no lender's mortgage insurance, because that's well within the risk parameters of the bank, and you get all the best deals at 80% of the loan to the value of the property. Now, yeah, I guess it does take a while to build that up, especially if you have only put down a 10% deposit plus costs, lender's mortgage insurance. It will take some time for you to pay down the loan of that property, as well as get some capital growth. But as soon as the value of the property goes up enough to where you can access that equity, all of a sudden, like, yeah, you can do a lot more. And that just starts with one, and then you get your second, and then that effect just doubles. And then over time, when you just get a good portfolio ticking along, you don't really have to do much else after that.
No, that's exciting. So when you say until the value of your property goes up, what does that look like? Is there a case study or a typical scenario you can share with us?
Man, it's I've even had, right, I had a mate of mine that did the first home loan deposit scheme. He put down a 5% deposit, and he bought a property in Elderslie. I think he bought it for 600,000 or something like that. So that was only a $30,000 deposit, and he was laughing. I think it was just over 12 months later during that, like, he bought it just before COVID. Yeah. And then, you know, when COVID hit, he was probably scared, like, oh, my property's going to go down in value.
Yeah.
And it was probably 14 months later. Excuse me.
Yeah, right.
14 months later, he came back to me and said, oh, look, I think I've got a bit of equity in the property. I want to get it revalued. So he put a 5% deposit down, right? 600,000. It was up around the 720 mark.
Wow.
In that short time. And not only was he able to refinance below 80%, no LMI.
Wow.
He got some cash out, about 50K. He consolidated debt and did some renos on his house.
There you go.
So that's the power of equity, man. Once you're in the market, once you can start to realize that equity effect, it's very powerful. It's the hardest part is getting the deposit together, really.
Okay.
Yeah.
So then in terms of the equity he had accessible to him, how would that work?
Yeah, so the property had went up in value enough and he had paid into the balance, which gave him, so the loan against his property versus what it was worth to that lender, it was at a position where that he was able to leverage that equity and access it in the form of cash. So that's pretty much how it works.
So then for numbers' sake, it would have been 720,000, subtract the balance of the loan, which would have been.
Yeah. Oh, it was in the fives at that time. I don't know the exact numbers, even of the value. Point is, he put down a 5% deposit, and within 14 months, the equity position had increased by about 20%. So he was able to get that 15% just in capital growth, and then have still some money on top. Like it was crazy, and that was just a house in Elderslie. Like, yeah.
And what do you think? The people that say it's too hard to get into the property market, what do they need to do?
Probably budget. have rich parents.
That's a good start.
Nah,
isn't it?
like-
Rob a bank.
Yes, spend less money than you earn
Yep.
for a start. Live within your means.
Mhm.
Having a budget is the only thing that's going to allow you to save, because the truth is most people, you make a money, you spend it. You make more money, you'll just spend more money.
Yep.
You have savings there, you think, oh, I'm good. These days to save money for a deposit, it ain't easy.
Mm.
Like if you've got a guarantor, that's great. If you can get gifted funds, that's great. But to save a deposit, it's tough to do.
So for people that don't really know what a guarantor means, does that mean my parents have to sell their house for me to buy a house? What does a guarantor mean? Because it's thrown around a lot, but people don't know what it means.
Yeah. So in a normal loan, when you're, so a normal loan, you've got a cash deposit,
Mm-hmm.
which is security for the loan, right? A guarantor loan means that you've got a property from your parents or a sibling that has equity in it. So there's a low loan to the value. And if you're doing a guarantor loan, that parent or sibling can use the property as security for your loan. It allows you to have no deposit.
Wow.
You just borrow the full amount plus any stamp duty and costs. Like you can even consolidate debt within a guarantor loan. So that's a really good way to get in the market. You can even do that for investments as well. So yeah, it doesn't have to be a property that you live in. You can just simply use a security property and borrow 100% of the purchase price. You've got to show that you can service the debt. So it helps you with no deposit, but you do have to service more because you pretty much have to get a bigger loan for what you're buying.
So as long as you earn enough money to cover the repayments in the bank's eyes, that's okay. Yeah. And so what you said earlier, your parents don't even need to have it paid off. They just have to have.
Just have enough.
Wow, that's
Yeah.
amazing.
Yeah, a lot of parents tend to say it's a little bit, speaking to the mic, mate. Just like this. Just like this.
I need to get my phone book and sit on that and get a bit higher. Only 5'4" in heels.
Oh, mate, what'd you say again? Could I have a teleprompter now? What was it?
In relation to the guarantor, so you were saying that they don't need any deposit. The parents don't need to have paid their house off. So a lot of people that have had a family home for 20 years may have equity in that to do that.
100%.
Mm.
And really, like the parents, a lot of times the parents do get a little bit concerned about doing that because I think they just don't understand what it means
Yeah.
fully. I remember when I was trying to get into the market, I was just flogging my dad, like, come on, mate, like guarantor, it's all good. I didn't even know what I was talking about back then, but as the broker, the guarantor is part of that loan transaction. So you have to have a separate meeting with them and explain exactly what it means to put your house up as security for a loan. So yeah, and I've never had a case where it's gone bad. And the chances of it happening, it's there, but like it's pretty low. Especially yeah, you just gotta make sure everyone's aware of what they're doing, pretty much.
And in relation to those guarantor loans, so like, would my parents need to be on there forever? I guess a lot of people wouldn't understand, or how does that work?
So it's not forever. It's not forever. Like in the case of my mate putting that 5% deposit down, technically he could have discharged from a guarantor loan within 14 months. So it's when you can just submit a discharge request when you've got about 10% in there, but you'd have to pay LMI, or you can wait until there's 20% of chunk in the deal in the form of making the repayments and equity increase. So if the loan is less than 80%, you can discharge with that lender, or you can just refinance to another. Yeah, but you can do it sooner. If it's an owner occupied, you can do it at 95%. You'd pay LMI, but that could be done very quickly. And a lot of guarantors don't know that. They think it is forever. And yeah, but
yeah, that's a lot of the talk I hear. A lot of parents are like, yeah, I don't want to put my house up for the next 30 years. I paid it off over these years. I worked hard,
yeah,
blah, blah, blah. So
especially if a client comes and they get a guarantor to purchase a property with you guys, I mean, they'll be discharged in 6 months, eh?
yeah,
That's
Fair
right.
income, mate. All the capital growth.
And can LMI be factored into the loan as well, or is that an out-of-pocket cost?
For guarantors?
Yeah.
No LMI. No LMI in guarantor loans. Yeah, because as long as there's enough equity in there, there's no LMI. You just borrow the full amount because the lender has security. LMI only kicks in because the lender doesn't have enough security in the form of cash. So yeah, there's no LMI if the guarantor has enough equity, and you're going to get really good deals because the lender has security. So you're not going to get any risky fees or anything like that. Like it's a sound deal for the bank. They're quite happy to lend on that.
Yeah. Okay. Awesome. And in what scenario would someone discharge early?
Yeah. Well, it depends. Like, I think after a year or 2 years, the guarantor wouldn't even know. You know, it's not like you think about it every day. Like, but if they could do it at if you've paid off enough to the loan is only at 90% of the value of the property, you could technically refinance. Then you'd pay LMI. But at that stage, you might as well just wait a year or another 2 years until you can discharge without paying LMI. Like, it's no biggie.
And what about if the guarantors want to buy another house? Do they have to sell their current house, or can they transfer the house or something like that? Or how does that work?
They can still buy.
Oh,
They can still buy, yeah.
So
it doesn't really, again, the more equity you have, it just opens up a lot more options for you. You've just got to have equity. Once it starts getting really high loan to what properties you own, that's when you could be considered a riskier borrower. So
yeah. So in that case, a lot of guarantors that don't really know how it works, what would you suggest them to do?
Speak to your broker.
Yep.
Yeah.
Wow.
Speak to your broker.
And they'll be able to tell what their position is.
Yeah, because they'll just probably make assumptions based on what they know, or but just don't go to a bank.
Yep. Speak to your local broker.
Yeah, definitely. Yeah, and I think there's a shortage of brokers, honestly. Like I think it's a very high demand industry, but you really need more brokers because even if it is 40% of loans being written in a bank, it's too much, man. It's too much because if there were more brokers, there'd be a lot more happy customers and they'd probably be getting better deals too. And those big banks, not always do they have to compete in the broker channel. Like CBA, they don't really need to compete in the broker channel. They'll just put their rate there and you know, Mr. and Mrs. Borrower would just go in, sign here. That, you know, what you can't compare to anyone else. CBA would just put their own rates there, man. They don't care. They don't need to compete against like Adelaide Bank or Me Bank or Bankwest. Like they're just gonna, they're too big. And a lot of people will just go into a branch because they don't know a broker. So yeah, I really promote any broker.
And what do you think about in terms of interest rates, fixed versus variable?
The heated debate. you'll a lot of times when I see articles or on the news like saying, "Oh, rates are going to go up, rates are going to go up," and it's like, you know, Westpac or CBA, NAB, they're the ones putting those articles out. And I think the only people that win from fixing their rate is a lender. Like they'll charge a premium for fixing your rate. Last year was different because the fixed rates were lower than the variable, and that's not very common. Now the variable rates are lower than the fixed rates by, you know, sometimes 0.5%, sometimes a full percent, depending on the years. So yeah, like if you've got a 2% variable rate versus a 2.5 or 2.6 2-year fixed rate, and you opt in for the fixed rate, you're banking on that variable rate going up above that 2.6 within the first year. And you know, a lot of times on a fixed rate, you opt out of having an offset or a redraw facility on that variable. So you got to kind of weigh that up. And yeah, if you want to leave early, you want to refinance because that lender doesn't fit your needs within that fixed period, they'll charge you a break cost, you know. And you think a lender's going to really give you a fixed rate that they're going to lose money on?
No, not at all. Unless it was
They know what they're doing, man. They know what they're doing. So
it's a business.
Yeah,
really,
my rates, they're variable. Like, but the conversation you have with the client is more just around explaining what each of them mean, the risks and the benefits, and it's really up to them at the end of the day. So I can't really influence that decision, but you just got to explain what they mean, and it's up to them to make the decision. Like I'm just got all the options and a lot of times when you do show them the difference in rates, like, oh, why is it higher? Like, well, you charge a premium, you want the luxury of having the certainty of your repayments, then they're going to charge you for it. So it's just weighing it up and thinking that, yeah, I think rates may go up, rates might go down. No one really knows. And anyone who fixed their rate in the last 10 years lost. I had some nightmares, like clients coming to me with 4.6% fixed rates last year, and they fixed it 5 years ago. And the break costs are like $3,000. Yeah, so it can get like, yeah, the lenders, they're not going to lose money on you fixing your rate. You think you're getting a one-up on them? Probably not.
Yeah, it's like when you get a 2-for-1 and it's just the same price.
You can fix a portion of your loan and you can have the other portion variable, and then you can test it for yourself over time. But
okay,
yeah, it's really hard to pick. You don't really know what's going to happen with the rates.
Yep. And with that option, so people can do a fixed and a variable if they're not sure.
Yeah.
Is that right?
Yeah.
Oh, that's interesting.
Yeah. A lot of times most lenders are going to charge a package fee anyway, but that would come as a package, like, because the variable portion would have an offset, have a redraw, and you'll have a split loan that'll be fixed. So generally that's like a package product. But yeah, that's definitely something that a lot of people do.
Awesome. And in terms of you, Jack, how many lenders would you have access to?
It's between 30 and 40. So that's just on our aggregator. Yeah, we can get direct accreditations as well, but that's a lot. Like generally, we try to utilize the full lender panel, especially for the trickier deals. Like some people come to you with some really niche situations, and you know the 10 or 15 lenders that you stick to because you know them well can't fit there. So you really got to go out and see what you can do for the customer, which you couldn't do at a branch. It's gonna say that again and again.
That's all right. Talk to your mortgage broker, right? But then, because not all mortgage brokers would have access to 10 or 40 lenders.
Whether
right?
they do or they don't, they just don't utilize it. Like there's a lot of brokers out there that'll stick to the majors, and they don't really delve into the non-bank lender or second tier lender. But I mean, that would be, I think an investment savvy mortgage broker would utilize a really big percentage of their lender panel and know the product niches between all of them. Because it's important to know all those product niches. It's pretty good what you can accomplish when you know the non-bank lenders, and yeah. But I know there's a lot of brokers out there will just stick to what they know. They'll stick to the big four. You know, they might have one or two other lenders that they deal with, but yeah, generally the big four lenders, they don't always have the best rate, and it's not always about the rate, but for most people it is. For most people, it's something that they can see and say, I know this rate is better than that rate. So they'll just go like, oh, I want this one. And all the time, like you can compare the big four to another 4 other lenders that they've maybe never heard of, but they're always going to go for the best rate because that's the thing that they can see and know that, yeah, well, that is cheaper. And if the option's there, then why not?
And in relation to that niche sort of stuff you were saying, what about people that, go into their bank and they've got a concreting business or they're brickies and they don't have tax returns and that sort of stuff, and the bank says, well, look, you don't earn enough income on paper, we can't give you a loan, but they earn more money than all of us put together? Yeah,
there's a lot of self-employed niches out there. You can get low doc loans as well, which is just an accountant's declaration. A lot of self-employed people, I think self-employed in particular is where they definitely need a broker.
Yep. Okay.
Because lenders, for sure, they've got that one skinny policy. And yeah, a broker for someone who's self-employed, there's so many self-employed niches out there between the lenders. And generally there's going to be a solution. That's something that come across a lot. A lot of self-employed people, they think, save as much money as possible on tax. But then when it comes to purchasing property, they're kind of hamstrung a bit, even though they're making a lot more than the average person. On paper, they're making a loss. It's funny. You gotta weigh it up.
But a lot of those people, they go into the bank and then the bank says no, so they're just really down and not sure what to do from there. But you think they can speak to their broker and look at some low doc or maybe alt doc options or something like that?
Definitely, yeah. More questions.
And what about in terms of expats or overseas buyers? Can you assist with them at all? Or?
Yeah, for sure.
Okay, so
and CBA is a good one for that. Okay. CBA loves the expats. Yeah,
beautiful. So pretty much you could almost assist any customer, or a broker can look at any customer.
Yeah. A broker that really spends the time and cares and utilizes the full lender panel can definitely help someone. Very rarely. Yeah, there's cases where some people can't be helped. That's the fact of the matter. But you tell them what they need to do. Like, well, based on what you have right now, there's no lender policy that I know that can help you, but you're not far off this one or this one, still give them options and a way forward, making them realize that the policy does change at times. But generally, especially for self-employed customers, like in time, you can make it work for them.
So what you're saying is you wouldn't normally say no to someone. You would educate them on, hey, this is what you need to do. You need to go and get another job, work more hours, save some more money, and then educate them.
Yeah.
Oh, that's awesome.
Work more hours. I don't
Financial advice.
That's really appealing for a lot of customers, but yeah.
Or get a better paying job, whatever it is.
All right. And Jack, just for investors, what percentage of the rental income is factored into the home loan application?
Yeah.
And what's that balance?
It's usually, most of the time, vast majority of the time, it's 80%. Some lenders will do 90%, very few, and some will untax the rental income. But this goes into the product niches of each lender, right? And like most lenders will say you have 3 properties, right? There's an expense to hold on to that property. When they shade the rental income, it's usually for vacancies. But there's always going to be an expense to hold that property, like property management expense, repairs and maintenance, stuff like that. So generally, it's about $250 a month per property. And there are lenders out there that will shade the rental income to 80%, but won't factor in any of that rental property expense. And that's a really good product niche for lenders that are trying to attract more investors. That's their target market.
So let's say, for example, if I've got a property that's got a really high rental yield, let's say a 7%, and my income is 50 grand per year, not as high as what a professional would be earning, working in a different industry like engineering or health or anything else like that. Would I be able to service that property simply because of the property having a higher rental income?
Yeah, having a higher rental income on the investment property is going to increase your borrowing capacity for sure.
Yeah.
But the 50 grand a year, mate, come on. Boost those numbers up. Get a second job, work more hours.
Get a second job on that one too?
Everyone starts somewhere, but you can still get into the market on that income. You can. Like it's about where you are at the time, and if you're ready to buy and you want to buy, then you get in where you can, and then you build on top of that.
And what are your thoughts, mate? Is the bubble gonna pop?
Bubble going to burst?
I don't know, man.
You don't know.
I don't know.
Don't know. Don't care.
Just protect yourself. Have cash buffers in place. Have income protection, life insurance. Just protect yourself. If you want to invest in property, make sure the finances are in order. Make sure you know when your interest-only terms are coming off. But cash buffers, insurances, that'll protect yourself. You can't plan on the bubble to burst. You can't just think, oh, everything's gonna collapse. Like maybe not. But make sure you got the cash buffers in place, the insurances. You know where your finances are, and you have your trusted advisors as well. So, yeah, I don't know.
Yeah. Okay. Awesome. And that's a great point because look, no one's got a crystal ball. I didn't foresee COVID happening. I don't think Daniel did himself. So
I think all the banks predicted that the market was going to dip by 20% or something like that. Eh?
Exactly right.
How wrong they were.
How wrong they were, and then they later adjusted their forecast as well, but they're still way off. So yeah, it's incredible. But then I guess probably why they do it is to just save their asses, or when it does go down, they'll be like, "Oh yeah,
told you so."
I told you so. Exactly right.
Yeah.
I think also the problem is too, people look at historic data and say, well, there was a decrease a few years ago, the bubble burst, this and this happened. But what people don't realize is at that time, there was so much stock coming in from overseas. There was too much stock for the economy. And now we've got building supply issues, slowdowns on builds, supply issues. There's only vacancy rates of less than 1% in majority of hotspots. So those sorts of things aren't factored into this time. So I still feel in certain areas, they're just going to boom like absolutely amazingly because there's going to be no stock. There's going to be no resources coming in. Build times are going to blow out to 1 or 2 years. So then what happens? Supply and demand, they just increase in value.
And see, that's why anytime someone's trying to invest in property and they ask me, oh, where should I buy? I'm like, look, I'm the mortgage broker, right? I'm gonna get you the finance.
Yeah.
If you're asking me where to buy, you just go straight to a buyer's agent, because not the average person who doesn't do it for a living or look into it as deeply as you guys do would be able to interpret the data and make informed decisions on purchasing property. And for something that is probably it's probably the biggest investment most people would make in housing, not only their own house, but in their investments. You're leveraged into the market a lot of times on one purchase at $500,000, right? You buy 2 or 3 properties, that could go up to 1.5 mil very quick. So these are very, very big investments that you're making. Wouldn't you want to use a professional to help you do that? Like it's crazy that, yeah, like there is a fee involved in using a buyer's agent, but every time you sell a property, you pay a real estate agent to sell your property. And there's a very small percentage of people selling a house without a real estate agent. But then people think that they could buy a property without a buyer's agent and think that they could come close to the results that a buyer's agent would get. Like if you buy a $500,000 property and it performs 1% better over 30 years compounding, you've just, that opportunity cost is just, it's huge. And if you use a buyer's agent, you're mitigating that risk. So I highly recommend buyer's agents all the time.
And that's a good point too, Jack. Like you look at it like that. So people are, when they sell a house, that's our economy. That's Australia. You sell a house, you use a real estate agent. In this day and age, it's probably easier to sell your own house and then use a buyer's agent to buy an investment.
It's true. It's probably easier to sell a house.
Absolutely.
It is. It's so funny. You put it on the market.
100%.
People are looking to buy houses to live in. It's so easy. But an investment property, especially because it's an investment, it's not emotional. It's about what's going to make you money.
Exactly.
And you're buying interstate, so you know nothing about the economy. You don't know anything about that area, and you think you're going to be half as good as what a buyer's agent is. Like, it's funny.
It's
very funny.
And to sell a house at the moment, you put it on realestate.com, you get 300 phone calls.
Bam.
Whoever gives you the highest money, accept it. Thanks for coming.
Yeah, but
exactly
I still think that a real estate agent would do a better job and get you the best price.
Absolutely.
Still. Yeah.
Absolutely.
Would you use a real estate agent if you were to sell your house?
I'd use you guys, mate. For sure. No, I would.
Yeah.
I would. I'd like, yeah, I think I could do it, and maybe I save 15 or 20 grand. But like, yeah, like this is what they do for a living. They know how to get buyers in. They know how to negotiate the deal. They know how to get you the best price, just like a buyer's agent. They buy properties every day. So to think that, you know, a nurse or a chiropractor can do what a buyer's agent does because they've bought 2 properties in their life, it's just not the case. It's just,
Yeah, that's like me trying to save 10 grand on my shoulder reconstruction and just doing it myself.
Yeah, exactly. Exactly. And I say to my clients sometimes when they're like umming and ahhing about a buyer's agent, I was like, look, it's like me coming to you for a home loan. Now, you wouldn't know where to start.
Oh, I'd have no blessed clue.
Yeah.
Yeah. Yeah. Okay. Awesome.
Just before we end the episode, we'll talk about something a bit more off topic, other than real estate or finance.
Politics.
We can talk politics.
Nah, I was joking.
UFC.
Don't open that
UFC.
can
We
of
can talk about
worms,
UFC
please.
all day.
Are you into UFC, Jack?
Yeah, get the beef jerky out of here. We'll talk about UFC all day.
Who's your favorite fighter?
It's funny. I'm not like, I have fighters that I like, but it's not like I'm a fan. I support this person. I just like watching the fights. It's a good day, good timing because it's always in America, and for us it's like a Sunday afternoon.
Yeah, 2 or 3
It's
o'clock.
perfect,
usually.
man.
Yeah.
You know, you have a few gin and tonics, and then by the time the UFC fights are finished, it's right in time for Korean barbecue. So
beautiful.
it's great.
Yeah.
This Sunday, man.
Oh yeah.
This Sunday.
I'll be there.
And what about you, Otis? Who's your favorite fighter?
Oh
I
mate.
already know.
Well, my uncle is actually the heavyweight champion, Mr. Francis Ngannou. So
Oh yeah.
yeah. So that's where I get my power from.
Ah,
In case you can't tell.
Uncle Francis.
Uncle
Have you done any
Francis, yeah.
training? Any training?
Yeah, look, I've done a bit of BJJ.
Oh yeah. Me too. Let's go.
Let's go now.
Let's go.
Yeah, no worries.
Have a bit of a roll.
Yeah, why not?
It's plenty of space.
Yeah, a lot of space. A bit of kickboxing too.
Yeah,
a bit
nice.
of boxing also. So I'm quite active on that front. How about
Yeah.
yourself?
Jiu-Jitsu once or twice a week at the most. I did MMA for a while, but I never liked striking. I didn't like getting hit in the head.
Yeah.
I'd rather just take them down and choke them. It's
that's
just
right.
a lot
Yeah.
safer for me. Just
Yeah.
More personal.
yeah, I just found it easier because I played footy growing up, so
Oh, did you?
taking people down
Yeah. Who
easier.
did you play for?
Eagle St Andrews, mate. Won 5 grand finals.
Oh, nice.
Represent.
Yeah, I played on the wing, so
Oh yeah.
I didn't do much.
Yeah.
It was all the
It's a
boys
fast
from
runner, huh?
Claymore. Yeah,
Yeah.
just had some toe. That's it.
I just want to bring us back to property. Reason being is because we're talking about the UFC now, and I feel like there's a correlation between sport and buying property. Just the essence of having a team behind you. So, for example, a UFC fighter's got a coach, right? They've got a trainer, they've got a manager, all that kind of stuff. And I
Yeah.
feel like with buying property, it's a bit similar too. What's your thoughts on that? The kind
100%.
of analogy, Jack.
100%. Like, especially when you have a few different properties, like when you start to build a portfolio, man, you really got to have a mortgage broker, a buyer's agent, and an accountant. When you got those 3, you've got a really solid team of advisors that can help you grow that portfolio and help you manage it and give you some assurances and just like clarity as well.
100%.
So yeah, nah.
And
definitely.
I think you're missing another major team player, solicitor as well.
Oh yeah. Shout out to
Mate,
Renee.
Shout out Renee from Fazzini Lawyers.
Thanks, Ren.
Yeah,
Because
sorry about that.
like just legal review,
Yeah.
like, you know, it's really difficult to understand, especially if you don't have a legal background. Like you're going to miss a lot of things in a contract. So I know that people don't really do conveyancing themselves, but the ones that do, mate, good on you.
Yeah.
You
Yeah,
don't
you're
want
right.
to miss that step.
Yeah, you're right. It's very important to have that network around you when you're buying property because yeah, the mistakes can be very costly. You make the wrong decision. Yeah, I know that firsthand.
Yeah, no, that was dope. And Jack, thank you so much for joining us today.
It's all good, man. I'll be back next week.
Yeah, 100%. And look, awesome chat. Thank you for being here. Thank you for shedding light into what you do. And
No worries.
thank you for your continuous support as well. So episode 1, WPG Property Podcast.
Workshop that.
Workshop that, done and dusted.
And a big thanks to Jack from Organic Home Loans.
All my details are going to be in the description. You already know.
Yeah,
Oh.
that's it. So, guys, if you're looking for a home loan, reach out to Mr. Jack Fouracre from Organic Home Loans and be in touch. He's got a very young and dynamic team. And yeah, Instagram, Facebook, LinkedIn, the works.
Yeah.
All right, that's awesome.
Thanks for having me, man.
Thanks, Jack.
Thanks, Jacko. We'd like to inform you that all our material is for informational purposes only and should not be considered as professional or financial advice. You should seek independent financial guidance from a professional who can advise you on the best ways to proceed in your personal circumstances.